Great, and welcome everyone that's joining us. Looking forward to having you all on the call today and hearing from our fantastic speakers. So my name is Meredith. I am the Industry Partnership Manager here at APCO, and I will be your host for today's session, the APCO Community Webinar on Sustainable Investment. Before we get started, we want to acknowledge the traditional owners of the land and the country throughout Australia and recognize the continuing connection to the land, waters, and culture. We pay our respects to their elders past, present, and emerging. So today's session, the APCO Community Webinar on Sustainable Investment. We wanted to start off by asking a question. So how can sustainability impact your company's investment opportunities? And today's topic isn't something we at APCO have really spoken about publicly very much. But it's often something that comes up in our conversations with members and in our stakeholder community. So we thought we would bring on a couple of experts on the topic to shed some light on this important area. So first up, we're going to hear from Michael van Niekerk. Michael is from Peakview Strategy, and he'll paint a very high-level picture of the current sustainable investing landscape in Australia. Our second speaker is Lachlan Feggans from Brambles. Lachlan will show us how sustainable investment is impacting actual businesses here in Australia and APCO members in actual practice. So from the APCO perspective, you may have seen us refer to the sustainability pyramid before. And I think for our team here, especially on member services, what we're working for is for APCO members and everyone really to kind of work through these different stages of sustainability. So down at the bottom, you see this idea of denial, and it can be for a business, but it can also be individually as well. Potentially, people see sustainability as just business as usual. There's no commitment, no reporting. Or they come into a compliance phase where it's more about risk avoidance, just avoiding a fee, reducing sanctions, or being really reactive. But where we love to see our members get to is up into these top two parts of the green pyramid. So around efficiency, when members and businesses can really understand that by being sustainable and incorporating into your different practices throughout the business, that you can reduce costs, you can eliminate waste, you can do more with less. And I think what we're really hoping out of today's session is by kind of listening to Lachlan's presentation and also hearing Michael speak about the current landscape is to understand that working through sustainability, it's not just about feeling good, it's kind of altruistic motives. It actually can be a very helpful part for your business at the bottom line. So by incorporating sustainability, you can get up into this very top part of the sustainable pyramid into a strategic area. So when sustainability becomes a strategic priority, part of your value proposition, and it's integrated throughout the business and also with your different stakeholders and partners. So that's where we're coming from. We hope that you find today's session incredibly useful. We often talk about at APCO the collective impact model. So just wanted to show this slide as well. It's taken from Rewiring the Economy from the Cambridge Institute for Sustainability Leadership, where they're really focusing on those different areas that government, finance, and different businesses can play in terms of rewiring the economy to be more sustainable. So there's a role for everyone from government to financial institutions and even for businesses. So I won't take up too much of today's time because I'm admittedly not a sustainable finance expert, but I'll leave it to the professionals and here to help everyone kind of along this journey throughout the session today. So I'd like to start off by introducing Michael. So Michael van Niekerk is the Director of Peakview Strategy and has over 25 years of experience in large, complex corporates, working with the most senior level executives and their teams on corporate finance and strategy. He's an experienced and pragmatic executive with good commercial judgment focused on delivering results. He also is a strategic advisor on the sustainability strategy, responsible investment, ESG, and impact investing, wealth and asset management strategy, and financial management. So Michael, welcome you to take control of the slide deck and to start presenting whenever you're ready.
Thanks, Meredith. Thanks, and hello, everyone. Right. Yeah, so just to start with, I think everyone's really aware that sustainability is now really going mainstream, and we certainly see it in the investment world. This is really driven by people and citizens raising issues such as those movements in the middle column there around climate change. We've got bushfires, more recently the Me Too movement, the Black Lives Matter, and even COVID-19. We've got businesses responding, corporates responding, and capital markets in our world are very much responding to this. And packaging is very much part of that theme. Even though it doesn't really come up in some of the key issues for investors now, it's in some of the subcategories, and we'll talk a little bit about that in a minute. As you can see on the left-hand side there of the slide, we've got the Paris Climate Agreement and the SDGs that were agreed to in 2015. And then more recently, the Task Force for Climate Disclosure is of some of the big movements happening internationally around sustainability. And we've got all the regulators here in Australia, ASIC and APRA, and others all supporting this. Needless to say, there's obviously government also getting behind, certainly in packaging. You've seen a number of recent announcements around that. So the movement's well and truly on. Some of the recent discussions, certainly in the investment world, is obviously around net zero and the climate goals. More and more so, we're hearing a lot more about biodiversity and protection. There's a new movement around regenerative. This has started really around regenerative agriculture, but it's into regenerative everything, and that's really putting back, in a way. Some of the sector themes, we've kind of got alternative protein and agriculture, fast fashion. Obviously, energy is massive in terms of renewables, water, recycling waste, etc. The tech solution, the overlay of tech solutions to these things is something that we watch quite closely as investors. And then the idea of circularity. The Ellen MacArthur Foundation has certainly led the charge on that, but it's now proliferating everywhere. And importantly for corporates, the last point there is around the supply chain. So you've got companies doing the best they can within their own businesses, but now they're starting to look down through their supply chains and look at what those businesses are doing, because they really contribute to the impact that they're having as well. So in the carbon world, you have scope 1 and 2 carbon emissions, and then scope 3 really looks to the supply chain and the customers. So what's the impact of the carbon that they're producing? So this idea of fixing up one supply chain in terms of sustainability is gaining some momentum. So what does that mean for corporates? So just the bubble on the right-hand side, you've got corporates thinking about sustainability and ESG, the environmental, social, and governance factors that impact their businesses. So they're thinking about their strategies, what they disclose in their annual reports and to investors. They're thinking about the targets they need to set around all these areas. There's lots of projects within companies that are going ahead to start to fix up some of these things. And typically, they're thinking about it from an economic perspective, which have decent paybacks. There are some that don't have great IRRs, but they're really good for the marketing aspects of companies. But companies are going beyond what people say, beyond corporate social responsibility to really embed sustainability in the way businesses are run. And obviously, leadership's required in this. If we think about, certainly you guys would be aware of Unilever and Danone. These are two global companies that have led the charge in this right from the beginning, and they've been at it for a long time. In terms of the indices that really look at all the companies across all sector, these two companies stand up. So they certainly are seen as leaders, even within the pack that are leading sustainability. So if we think about the investors, in Australia, we've got responsible investment, the whole movement. It's roughly just over 40% of the total market, so $980 billion of professionally managed assets under management. And that figure of 2.2 trillion is now 2.8 trillion, so that's growing. but it's a large slab of the total market of assets managed that people are now starting to think about responsible investment. The chart on the right-hand side shows how that's split. There's a whole range of different strategies within responsible investing, from ESG integration to negative screens, positive screens, sustainability themed, et cetera, and impact investing. The big chunk of that is ESG integration and corporate engagement and shareholder action. So the ESG integration, that's around $400 billion worth of assets. Those investors are really looking at a whole range of ESG factors, and there's a slide later on, I'll just provide some examples. But across the environment, social and governance factors, they're looking at the materiality of those factors. And then the second piece is around corporate engagement. They're talking to investors and the investor relation departments about what's going on, and they're advocating for change. So as companies, they want to be seen, they want these companies to be doing things to improve their sustainability, to remove that risk, whether it's around climate change or brand perception. There's a whole range of different things that they need to start thinking about. You know, there are specific styles of funds. If you think of the positive screens, even though it's a small segment there are funds such as Circulate Capital, that's now Washington-based, but now up in Asia. They're just looking at recycling. It's a specific fund looking at recycling and plastics up in Southeast Asia. So you're getting these theme funds, you've got water funds, plastic funds, all these different types of funds starting to emerge. Just briefly, the two slides we've got here are, on the left-hand side, the negative screens as a strategy. You can see on the left-hand side there all the different styles of screens, and really the popularity amongst investors on screening out certain sectors. So at the top, we've really got controversial weapons, tobacco, gambling, all the sin sectors and sin stocks. On it go to alcohol, adult content, human rights abuses, nuclear power, et cetera. On the right-hand side, you've got the positive screens, like the impact investors and the thematic investors. And you can look, you know, starting from the top in terms of size, you've got renewable energy, more sustainable companies, social impact investments, sustainable land and management, agriculture, et cetera. So those really look to provide funds to really advance the improvement of those types of issues. Packaging and plastic doesn't really come up as a thematic yet, but certainly it's rising in terms of investor awareness, and questions are certainly being asked of companies about how they're dealing with their plastic waste. So there's a range of different dynamics that are driving investment into various sectors, and particularly into sustainable packaging. Obviously, government policy and regulation at all levels. This, I'm sure this audience is very aware of that. You've got companies themselves becoming more responsible. That's driving sustainability within the organizations. And then you've got various movements driven by citizens and NGO activism as well. And then, as I said out there, there's a number of movements such as the reduce, reuse, recycling movement, the circular economy, and things such as alternative materials. And obviously, then there's private capital looking for opportunities. So that's all driving investments into the sector. So who's playing in the sector? As I mentioned previously, you've really got people right across the value chain investing, but you've got the groups that are providing capital are typically government. So you've got state grants, federal grants, local government grants. You've got the big institutional investors that are typically putting big licks of capital into processing plants and to listed equities and companies, and providing debt listed, providing credit through debt funds to companies as well. And then you've got the private investors, you know, private equity, venture capital, providing both equity and debt. And then not to forget is the banks providing project finance for various things. And lastly, that might have implication for people on this call, is companies themselves looking to invest their own capital into projects within their businesses. And as I say, this is happening right across the value chain. I mentioned the ESG factors. Here's a whole set, and I won't go through them, but I'll just say investors like to look at the most material factors affecting a company. And each sector and each company would have specific sets of measures that they look to analyze. These measures over here are the fairly standard ESG factors that companies will be looking to assess a company on. And so, these can vary from, 20, 30, 40, 50 measures that ESG investors will typically be looking at. So in terms of integrating it into a company, there are a whole range of different approaches to this and a range of benefits, obviously. What we find is companies start on a particular journey towards becoming more sustainable and then invest further and further into that. Initially, we see companies really looking at de-risking their business and doing things that are typically have commercial benefits. Those tend to lie often in renewables and reducing their carbon footprint. The economics for those things stack up quite quickly. Now we find, most analysts are talking to companies, even if they're not ESG funds, they'll be talking to companies about the factors going on in companies. This is simply good management practice to be thinking about these long-term risks. And so the investor world certainly see it that way. There are a number of companies obviously getting on the front foot and see it as a strategic advantage to be thinking about sustainable issues within their company. And lastly, just the point there around the ESG funds, the collective of companies within those funds, the performance of those, we've seen their meta studies that have been done by various groups showing that they're now outperforming traditional funds. As I mentioned earlier, there's a range of different approaches to starting on this journey. I've just set out a little framework there that I've used with a number of companies that I've had engagements with on approaching this. So back in 2015-16, there are a number of ESG investors. I used to work with one who excluded Woolworths from their universe for a range of reasons. Under the new CEO, Brad Banducci, when he came on board in 2016, there was a kind of a step change in their thinking around sustainability. They kind of started with this idea of focusing on purpose, and then a whole lot of initiatives led off from there. From looking at gender and equity issues within the organization, building up the sustainability team. They put together a subcommittee of the board around sustainability. They then set up a $30 million organic growth fund. They led the charge on plastic bags and CDS. And then they've got nowadays they've got a dedicated sustainability report that goes with their annual report. They talk to investors on their investor days about the stuff. They've done a lot of work on renewables and rooftop and looking at their HVAC systems and refrigeration and all the energy components of that. They're putting solar on roofs. They've started an innovation program around packaging waste and energy and greenhouse gases. They've actually issued a green bond, a $400 million green bond to put towards all these projects. So they've gone out to the market for that. And now have most recently introduced paper bags into their stores. Needless to say, they've found, certainly through the issue of the green bond, they've found a whole lot of new investors, but the sentiment in the market around what Woolies is doing has changed, and I suspect the ESG investors are now supporting the stock, which is then obviously lowering the cost of capital and a whole range of benefits from there. So lastly, the other example, which is a new initiative in the market, we're working with South Pole. We're introducing this Plastic Action Fund to Australia. And in essence, it's like a carbon market where you've really got companies buying plastic credits from issuers of plastic credits. So those companies are really funding and helping fund various initiatives to clean up plastic in Australia. And we believe this market could be quite big, and talking to a range of players in that. But this is an example of the kind of innovation that's happening across the world. This idea of the Plastic Action Fund is a global initiative, but we're looking at the Australian fund developing that in the next few months here. I might just leave it there, Meredith, and happy to take questions in Q&A.
Perfect, thank you, Michael. I think really interesting frame up. It's really interesting, I think, to see kind of where some of the new trends are going, and I think some opportunities absolutely for some of our members, not only in the packaging space, but obviously with some of the energy emissions, the different waste transport things that are probably something that will be helpful for them to consider as well. So we'll just move on to the next slide. Lachlan, I think you probably have control now.
Yes, I do have control. Hi everyone, Lachlan here from Brambles and also CHEP Australia. So look, as I said, Director of Sustainability for Brambles Limited, and Brambles I know won't be a familiar name to everyone on the call, but we operate through the CHEP brand, probably better known as CHEP Pallets. So just to set the context there. So we'll move to next slide. Look, just to set a little bit of context for Brambles, we're a supply chain logistics company, and we're essentially, we provide reusable packaging, essentially pallets, crates and containers. Now we the number one market leader in all the regions in which we operate. We're the pioneer of a sharing and circular economy, bringing those two things together. We have a very defensive customer base, and from an investor perspective, this is really interesting because COVID-19, as we saw in Michael's slides, there's featured throughout a lot of the organisations, businesses that are on this call, and certainly ours, because the demand at a Woolies or the retail end has increased the demand for our products as well. Okay, and investors look at this and say, well, if there's an economic downturn or if there's an economic crisis, Brambles is linked to consumer staples. All right, so it actually stays quite level through those particular fluctuations, both up and down. So that's why we're considered a defensive stock. Majority of the revenue is generated outside Australia. The US and European Union, UK are the biggest markets for us, but we're one of the largest listed companies in Australia. And just in terms of scale, in terms of our products, we have a roughly 330 million pallets, crates and containers circulating through supply chains throughout the world, and passing through over 750 plus service centres as well. So look, what we like to say is we connect people with life's essentials, and during this COVID crisis, it's exactly what we've been doing. Our assets form an invisible backbone of the global supply chain, moving goods through, back, forth and around. And the scale and density of our network is something that is really attractive to investors. They tend to like to understand that, and that's one of the questions they ask when we engage them. And we also deal with a lot of the biggest brands in all markets, as many of you will know. So these might seem familiar, pallets, crates and containers. A lot of them might be in the participants' supply chains who are on this call today. But what we're looking at here is reusable packaging. It's reusable, it's durable, it's repairable, and each use of one of these products will generally eliminate the use of a single-use disposable alternative. And that's really the fundamental basis of our sustainability story. And when we are talking to investors, this is where things start. Ask questions like, why is Brambles sustainable? And this is where we start that conversation. So in terms of how we operate, we essentially supply reusable pallets, crates and containers to customers. These customers have to move goods through the supply chain. And once they've done with that particular pallet, crate or container, they can either return it back to Brambles or they arrange for a transfer onto another supply chain participant. Good example of that is a food manufacturer moving food on a pallet to a retailer, for example. And once those pallets stack up at the retailers, we will collect them and bring them back to the service centre to repair and refurbish those. So this is the question we have with investors when we engage, and we are increasing our ESG engagement with investors, and this is increased over the last 18 months to 24 months, quite a lot. And we essentially find ourselves playing a bit of an education, awareness and capacity building role. A lot of investors are coming to the ESG space, not so much new, but they do want to understand why is your company, considered sustainable? What is material to your business, as Michael mentioned, or what is critical for your business when it comes to sustainability? So we started the basics. What's the burning platform? What is wrong with supply chains? And we start with the linear economy. The take, make, use, dispose economy is just simply not sustainable. It's far from circular. So these metrics from Newsweek, they did an analysis a few years ago on the circular economy. And they said today was basically the world is 9% circular, and in 5 years, 77% of companies are going to have circular targets. And that is something a lot of you may already have in your organisation, or you may be thinking about implying. And this is something that investors are interested in because they can see this trend occurring and they want to know what's behind that. So another thing that we talk to them about is the difference between reuse and recycle. And this is quite fundamental to Brambles as a business. We're all about reuse, okay? And the image on the right here is, a sort of representation of our European network, and we described the scale and network density of our network, as you can see there, and it's not real or anything. This is just a diagram for illustrative purposes. The more participants we have in this, the more efficient it becomes. And the more participants sharing and reusing our assets to move goods through the supply chain and returning them back to us, there's shorter transport distances. And what that means is less emissions and, of course, much less use of materials to move goods through the supply chain. Because if one product can, perform a job in the supply chain many times and be reused and last, 10 years or maybe 50, 100 uses, then the resources for that particular packaging product, that vessel, are greatly reduced, significantly reduced. So our key message for investors is that that reuse is the fundamental concept of the circular economy. And then we get into some particulars. And as an example, only a couple of weeks ago, where we had a call with a sustainable investor, a large investor from a global perspective, but we were dealing with their Australian arm. And we had a really in-depth conversation about life cycle assessment. Like we went right to the nitty-gritty, and it was fantastic because, in sustainability nerds like myself, we start to get interest in, what's under the hood. That was really, really interesting to share that. We do have investors like that who really want to know what's going on, why are you sustainable, how do you substantiate those claims? And this is something that we are well versed in because we've been doing this with customers for a very long time. And what we explain to them is using this peer-reviewed independent process, comparing a Brambles packaging option versus a single-use alternative. The environmental benefits of the reusable Brambles option far outweigh the single-use significantly in most cases. So that is something that investors find really interesting. And then they say, okay, well, what's next? And essentially, how does that help your customers? What we have here is essentially all the life cycle assessments that Brambles undertakes in all the regions that it operates. We bring that together on an annual basis. We aggregate those numbers, and these are the numbers that we communicate. And you'll see these in our annual report. It's in our sustainability report. And investors really like the fact that we can actually put some metrics around this. I've heard an analogy that sustainability people are PowerPoint people and investors are spreadsheet people. I find that quite funny, but when they can see that you can put some metrics behind the sustainability benefits, they actually really like this, and they share these metrics with their own constituents, and we talk to them about how we share them as well with our customer network. So the question from them is, how does sustainability help customers? And we really say, from Brambles' perspective, we're introducing circularity into customer supply chains. It differentiates us as a provider of our services, and it also opens up some really unique collaboration opportunities, which wouldn't otherwise be there had we not have the business model that we have. So our customer journey has been quite interesting. So as this slide appears on your screens, starting from the left here, we've really elevated relationships, and we find that sustainability brings the conversation around sustainability, talks about a higher value conversation with customers as opposed to a price conversation. I think that's helped elevate those relationships. The next piece along here is the share and reuse benefits, and what you've got there is a very small image of what's called a sustainability certificate. I'll show you what that looks like on the next slide. The sustainability certificate is basically specific to the customer supply chain. It's essentially the life cycle assessment results of them using our products in their supply chain. And customers have been actually using this as a credential. So we move to the third point here. They're looking at pooling or circular economy as a credential, and they take our numbers, we talk through how we've come up with those, and they actually publish those in their public reports. And we've got a few international examples there of manufacturers and retailers that actually have used Brambles figures in their reporting. It also opens up opportunities for collaboration, as I mentioned, value-add projects. And we've got one example from a few years ago with Walmart there. And we also opens up opportunities like we have today to put a bit of thought leadership out there around circular economy. So that's where we start with that conversation when we're having that with investors. This is something that some of the participants on the call might be familiar with. You may have received one of these from CHEP Australia. So this is a sustainability certificate, and what it helps do is talk about the fact that using reusable packaging helps take emissions out of your supply chain. It helps take solid waste out of your supply chain, and we provide this to APCO members for use in their APCO reporting. And we've found that this has been a really good engagement tool as well, right across our customer network. And investors are really interested in this because it's quite unique. They haven't seen this done from a sustainability perspective before. We're not going to take credit for this in Australia. They were doing this in Europe back in 2014, but we've certainly borrowed that idea and shared that best practice locally. So ESG recognition is also a thing that we talk to investors about. So many of you who are working listed companies, you're probably familiar with a lot of these indexes, rating agencies that pop up now and again. The perennial question from a sustainability professional is like, which ones do I do? Which ones are investors interested in? We generally find there's the range of answers here, so there's not one answer. But what we do find is that they open the door to more capital. It's like a hygiene piece where if you go through these and you're rated at a really good level with these particular indexes or rating agencies, it allows your business to be opened up to more capital. So as Michael mentioned, you get past the sin stock piece and you get more into the positive impact side of things, and that's why these particular metrics can be quite valuable. This particular metric is quite new. This is not an ESG metric, but it is something that really helps our business communicate its circularity. Michael's mentioned the Ellen MacArthur Foundation a moment ago. We've been working with them since back in 2015, and they've released what's essentially the first circularity measure for companies. So we've basically gone through this process. We've received an A, which reflects a leading position in the circular economy. And we share this with investors because the third-party credibility of metrics like this is very important, because it's not just Brambles saying that we're sustainable, it's someone that's credible, a leading authority on the particular topic on circularity that is also confirming that claim. Barron's named us the most sustainable company globally last year. We were scratching our heads a couple of years ago when we received this notification when we were second most sustainable, because we didn't know who Barron's was. Barron's is quite a big investment magazine in the US, so it meant a big deal to our US constituents over there. And they actually use a lot of those metrics that are on the previous slide when it comes to doing their valuations from an ESG perspective. So it was quite an interesting process, but a really good accolade that we like to share. What we're seeing here is investors are changing, and there's this slide here is probably, the next slide is probably something you can take away and have a look at yourselves, but I'll focus on the top left-hand side here in terms of PRI and TCFD. These things have been mentioned by Michael. when we're engaging with investors, we're finding ESG is becoming much more topical. We include ESG in our roadshows, we have ESG specific meetings, or when we do have meetings with investors, we do ESG at the same time. And look, just some desktop research we did recently, 60% of our top 20 shareholders are PRI signatories. Because they're PRI signatories, which is the Principles for Responsible Investment, they need to be transparent about where they're putting their money. And they want to be investing in sustainable companies. So that is a way that they can demonstrate to their shareholders that they're making sustainable change. One thing I'll just quickly mention on one of the frameworks that investors are asking more and more about, and Michael's mentioned this as well, TCFD, or the Task Force for Climate-Related Financial Disclosures. Very briefly on this is not so much about what Brambles is doing to the environment or how Brambles is impacting climate change. It's more about, this framework asks, what is climate change going to do to Brambles? How are you going to create value as the climate warms and then gets hotter and hotter? How are you going to, continue to prosper in the short, medium, and longer term? And this is a framework that has probably received the most prominence from an investor perspective of late, and has certainly overtaken a lot of the other ones. And we're going to be putting out a disclosure on the 18th of August, responding to the TCFD, as many ASX companies will be. They often ask us what's next. Okay, you've got a great sustainability brand, so where do you think you can make a difference next? And what we're aiming to do is to actually become a regenerative company. And another thing that Michael's mentioned, it definitely had its origins in the agriculture space, but now it is moving into the corporate sphere. So I'll finish on the last slide, and I'll leave what's up on this slide for you guys while we're moving into the next phase of the session. But all in all, we're seeing a lot more interest from investors, and I echo what Michael's been saying about investors actually wanting to make a difference and needing to be transparent about how they make a difference, and the opportunities to engage and share your story with investors has never been more open. So I encourage you to look into how you can do this, even if you're a small to medium enterprise and you're not listed, this is still very much relevant. So thank you all, and we'll move on to the next part of the session.
Perfect. Thank you, Lachlan. And Michael, I think you called it in terms of some of those key trends that we're seeing around regenerative. I think particularly that kind of going from just replacing, or the not just carbon neutrality or resource neutrality, but actually having that positive impact. So thank you, Lachlan, for sharing with us some of those sneak peeks. And just a couple of quick comments from me as well. I think particularly interesting around the TCFD that you both mentioned, and how will climate change actually impact our businesses. And I think probably particularly interesting for anyone using those primary resources. Now, we've heard from a few of our members working in maybe the wine industry, where there's a lot of how will climate change impact the wine, the growth of the grapes, water usage, prices around water, different areas like that. So certainly something to consider. So I'll start with one of our first questions that's come through. And Lachlan, this is a question for you probably, and sort of addressed in your presentation, but maybe you can build on this a little bit. So this question comes from Keith. Hi, Keith. And he's asking, what do you see the future of recycled plastic pallets replacing timber CHEP pallets? Is it an initial cost of the pallet, lack of market, or potentially, Lachlan, it's something more around being fit for purpose? Can you just tell us a little bit more about that?
Absolutely. We get this question a lot from investors too. Look, we're the largest owner of plastic pallets in the world as well. One of the images you would have seen on a previous slide is a 100% upcycled pallet made from milk bottle tops called the PP3. They're really suitable for high hygiene environments, food manufacturing environments, that kind of thing. But you're right, initial cost of a plastic pallet is higher. They get damaged in the supply chain. Forklifts are not nice to pallets, as many of you may know. And then once it's damaged, you need to regrind it and to turn it back into another pallet. Timber, we can pull off a board and replace it. So fit for purpose in the right part of the supply chain is really critical. So look, I'm not going to look into my crystal ball here and say one's going to replace the other, but I would say that there will be suitable circumstances where one material might be more suitable than another. For us, the key thing is not one that's more sustainable than the other. That's for sure, because all the timber that we use in our pallets is sustainably sourced. It's the share and reuse of our products. That's what makes us sustainable. We're materials agnostic. We'll make a pallets, from anything, but it's the sharing and reusing of those particular products that actually creates the sustainability benefits.
Absolutely. And I think it's, when you look at reuse as well, and what might be an interesting consideration when it comes to investment is that network slide that you showed of Europe, and probably also for any country really, but looking at, as we have more and more reuse models coming out, that potentially reduces those costs that we have in between sharing. And the more that we can do that, the more accessible some of those options become for other industries around reuse. There's something really interesting there. Michael, here's a question for you. So when looking to get started in sustainable investment, what are some recommendations on how to get involved? And I'm going to build on this question a little bit, but maybe from starting with a personal perspective as an individual, and then potentially for a business side as well.
So from an investor perspective or from the company perspective?
Probably from a company perspective.
Yeah. So I think the first thing is to think about that issue I raised around materiality. What are the most material things affecting your company from a sustainability perspective? There are many frameworks, and the framework in the slides, and very happy for those to be shared, will give you a start on that. The model that I've used is very simplistically this PPP model, planet, purpose, and profit. And so that kind of goes to the ESG factors to some extent, but I think the key thing is to start with those most material things and to work on those and get the framework set. Obviously, leadership is important to get buy-in from the leaders in an organization to do this, and to watch, and in that is to get it resourced and at the right level of the organization, whether you can set up a subcommittee of a board, that's probably down the track, but to get resources to do it properly. A lot of still doing things on the side on a CSR basis to really get the public relations benefits out of it and the stories. And there is a lot of storytelling about what companies are doing, but you really want to embed it in the organization. That's probably the key thing. So to focus on one or two things that can really make a difference. And then the other thing I'd say is to bring the staff and the team and the organization on that journey. And that requires a lot of effort as well to really get it. And there's a number of internal measures around waste and water and electricity use and travel and all those elements that each person in the organization can relate to, but you're relating to it at home as well. In your organization, and then to be measuring those. So set some goals. That's the other key thing, is set goals, 5 years and 10 years. There might be stretch goals, but like all these net zero targets, people are saying we're going to be net zero by 2030, 2040, 2050. We don't know how we're going to get there, but we're on a journey. And as investment analysts, the market don't necessarily want all the answers. They want to see that you're on that journey. That's really what they want to be seeing. And they understand that companies are all on this journey, and it's very difficult in some industries. So let me leave it there.
Thank you. And Lachlan, anything to build on that, I guess, from your own experience? You said it's been in the last 18 months or so that you've really had a bit more of those conversations with investors. Any other advice for businesses out there that are just starting this journey?
Sure. Look, my manager who leads the business is based in Madrid. When I first started, he said to the CEO, sustainability is key for customers. And he said, don't believe you, prove it. And we did. And essentially the customers' interest in sustainability just kept on increasing. And it was a really key decision maker, and is in tenders, it's in contracts. It comes up all the time these days. Then we said, we think we'll do the same with investors. And again, I don't believe you. And, 3 years ago, we started this ESG program within the business to engage more actively in ESG. And we've just seen that grow and grow and grow. And and that's followed the trend that the investors have been following themselves. So yeah, it's there's lots of examples. If you need to build a case internally for your organisation, there's lots to choose from, and those trends are much better known than they were 2 or 3 years ago now.
Fantastic, thank you. All right, we have one more question coming in. I think this is a great one. So how important is government support in driving business certainty around pursuing these types of initiatives? So does that encourage greater investment? So does government support encourage greater investment? Michael, you touched on this a little bit. Is that one you might want to answer first?
Yeah, there's absolutely is the first, and I've I did a master's program at Cambridge a number of years ago, and that was one of the findings around government's role in all this. But certainly from the policy setting, it's critical, and we've obviously got challenges in this country around certain sectors on sustainability, particularly around the carbon problem. But they the federal government's very supportive on packaging and plastics, for example, so it plays very well into this industry. So there's a range of different sustainability issues. In terms of capital, I think that varies. I mean, the government, for example, has set up the Clean Energy Finance Corporation. They've been given $10 billion, and we work with them very closely. And ARENA, which is potentially to be refunded, but they're leading the charge on the hydrogen revolution. So they've put serious amounts of capital through different instruments into the industry to make this transition. Yes, there's vested interest around some of the fossil fuel companies because we're very heavily reliant on those, in gas and coal and even oil to some extent. So there is politics involved, but governments at all levels, I think, are playing a key role. If we think about the state governments, all state governments have committed to net zero by 2050. I don't know about local governments which have and haven't. Obviously, the federal government aren't there, but there's signalling and certain strategies around it. That means there's a lot of commitment to achieving that. As I say, the how is not clear, but capital will flow behind those policies. And I think about New South Wales, where we are, the Minister for Environment is very, very strong on this and has a range of policies. So absolutely government's key, really around policy and regulation, and then capital as well. And then, they work very closely with the big super funds. I've done a lot of work advising super funds. They're putting pressure on the asset managers on ESG, and they then putting pressure on the company. So there's that cascading effect and lots of global movements around this engagement, which Lachlan would probably feel the heat on, whether it's Climate Action 100, all these investor groups ganging up on these companies saying, well, what are you doing about these issues? So let me leave it there.
Fantastic. I think that's really helpful. And another question for you, probably, Michael, we spoke about this a little bit before the call, around super funds. So as an individual, when I'm at home, what's something that I can do if I'm looking to start investing as an individual person? Is there anything that I can do as a first step?
Yeah, I mean, I've worked in the superannuation industry for a long time. One of the big issues is people don't care about their super until they typically get to 45, 50 and they're thinking about retirement. So people younger than 45 set and forget, and they don't know what's in their super fund, and it's not really aligned to their values and what they like to invest in. So if you're thinking about these and you care about these ESG issues and these social issues, climate change, etc., really think about what's in your super fund. That means calling them up and saying, what's in my fund? And then potentially moving it to another fund that's more aligned to your values and how you think about these things. And most of the big super funds all have options, so you can move out of their core fund into a sustainable option that's more aligned to your values. There are movements around the world to make this happen, and there's one called MMMM, Make My Money Matter, being developed out of the UK. We're going to host them hopefully in the next month, run by Richard Curtis, who's a filmmaker and a communicator. He's done a lot of the very popular films in the UK that have come out of the UK in the last decade or so. But he's running this campaign to get people to really look at their super fund, they claiming that, you know, the power of the money that's invested in people's super funds on average is 26 times more powerful than some of the actions that they might be doing at home. So cycling to work and taking shorter showers and eating protein, you know, not meat, but all these things that are, you know, protecting the climate. They're saying what you do with your money and where it's invested can be much more powerful to solve some of these problems. So there is this movement for individuals to use the power of their finance to put to better use or aligned with their values. And as I said, a lot of super funds out there do have options, and in the non-super world as well, there's places to invest money. So this movement is moving quite quickly as well.
Yeah, I think that's very helpful. So something for us all to potentially consider is, you know, thinking about where does your money go, and having a considered look at that. So Michael, we'll leave that with you. Lachlan, any final comments? There are a few questions that came through around circularity. So maybe just could you give us a quick bit of advice on someone's looking to get started in the circular space? Where is a good place for them to go at first?
I think that number one, you're already in it. Being a member of APCO and joining these community webinars, assuming that everyone is a member here, that's your path to circularity. The other thing I've mentioned is the Ellen MacArthur Circularity program. Look it up online. I believe you can just actually do the methodology. It doesn't cost anything. The report that it spits out at the end of it gives you ideas of where you can improve, and we got areas for improvement when we went through our Circularity journey as well. So those tools are only just becoming available now, but I'd say that APCO first and foremost, because the areas for improvement in the APCO reporting tool are absolutely critical, and they're going to be quite similar to what you're seeing in the Ellen MacArthur Circularity tool, because we've done both of those. So a really good place to start.
Fantastic. Great. Well, thank you, Lachlan. And thank you, Michael. We really appreciate your insight and your knowledge in this space. If anyone has any questions that we haven't had a chance to get to, please let the team know and we'll be sure to get in touch with you. You can find both Lachlan and Michael on LinkedIn as well if you would like to get in touch with them further after this. So thank you everyone for joining us today on our APCO community webinars. They are continuing weekly. Next week we will be looking at Plastic Free July. A bit of a special webinar. We'll have the founder, Rebecca Prince-Ruiz, on, as well as Jenny Downs, who is from Behavior Works, to talk a little bit about behavior change and plastics. And again, thank you to our speakers. Thank you to Joe for all of your hard work behind the scenes. And thank you to the whole APCO team. Have a great day, everyone.
Bye, everyone.
Bye.